ETHFI aims to build the most profitable on-chain bank where you can save, borrow, and spend crypto like cash. Traditional banks give you 1% on your dollar savings. ETHFI gives you 9% and full control over your money. But how sustainable is it really? And is the ETHFI token worth an investment? Let's find right out. Okay, so let's talk first about the products of ETHFI. First, we have the stake/save function. So the overall goal of ETHFI is to be a neo crypto bank. What does it mean? A neo bank is a regular bank application on your phone that doesn't have physical branches, like for example Revolut, Robinhood, or Wise. What do you need in your product suite in order to be considered a legit bank application? Well, first of all, you need a savings function. And the savings function of ETHFI is stake. So you can put your Ethereum, Bitcoin, US dollars, and HYPE into a savings application, and the products will give you yield on your savings. And in the case of dollar, that is 1.5%. In the case of Ethereum, it is roughly 3%, and so on. Then we have an investment product. So if you do banking, you might want to invest as well. Let's start here with the liquid ETH yield. This is a higher yield right now than the savings product because it is higher risk. These Ethereum will get deployed into different DeFi protocols in order to earn you a higher yield, higher risk, higher reward. Same goes for the liquid Bitcoin yield and the dollar yield, which is 9.3% at the moment, which is really crazy to think about because most banking products won't give you any yield on your US dollars. Then you have to spend your money somehow, right? And in the case of ETHFI, this is the cash product. With the cash product, you're getting a Visa card, a crypto Visa card, where you can spend your crypto anywhere in the world. And you have a nice interface here where it shows you, you can spend your savings, or you can borrow against your existing positions. And that has some advantages because borrowed money is usually not taxed in most jurisdictions. So you can actually spend your crypto without realizing any gains, which is a really nice feature. And then ETHFI has a fourth product on their roadmap, which is not live yet, and that is called Trade and or Swap. And what does this entail? You can swap one crypto for another on a spot trade, or you could trade on leverage. I'll talk about the product more in detail later into the video, but this could be a really nice feature in the ETHFI app. So let's talk about how big ETHFI could get with its total addressable market. I looked up some DeFi competitors here. And first of all, let's have a look at the user. So here's ETHFI, and then you have Nubank, which is the biggest, which you can find primarily in Latin America. Then we have SoFi, which is, I think, primarily in the US, and Chime, which has also primarily US customers. Let's have a look at the users. So Nubank has 122 million users. SoFi has 11.7 million users, Chime has 12.4 million users, and ETHFI has below 150k users. So a lot of room to grow for ETHFI here. Then if we look at revenue, ETHFI is also making way less revenue than all of these other banks. But if we consider the revenue per user, then ETHFI makes by far the most money on its users with $466, which really shows you the potential of crypto customers. Then we can look at the price to revenue. Most of these fintech players don't really have high revenue multiples. ETHFI is quite a bit higher, and we'll see further into the presentation if this higher valuation is justified by higher growth of ETHFI. And then finally, we have the market capitalization. And the biggest bank here, the Nubank in this case, is worth $74.7 billion. And ETHFI is worth merely $1.3 billion. And that really shows you the potential, the growth potential of ETHFI, even if it weren't to grow to the size of Nubank. If it was like some average of all of these banks, there is still a high multiple possible in terms of market cap for ETHFI. Then we have to talk about how ETHFI actually makes money on their products. Let's go through the products again one by one. So in the beginning, we had the savings product, right? Where you can put your money in order to save. And that is called stake in ETHFI. And ETHFI is simply taking a 10% cut of the yield that you are getting in the staking product. And the most used asset in the savings product is actually Ethereum. So let's have a look here on how this savings product has grown over the last couple of years. And you can see here that it peaked at around 2.7 million in ETH staked here. And over the last couple of months has actually declined a little bit in total value locked. The difference between the purple line and the blue line is that ETHFI actually loops part of its ETH holdings on Aave, and that's why they're earning a little bit money on a little bit more Ethereum than are actually locked into the protocol. The ETH price is at $4,500 on average, let's say over the last couple of months. Then the staking rewards are at 3.5%. ETH in the protocol are 2.76 million. That's a relevant number here because looped part of the ETH position on Aave, and that gets them an annualized revenue of $43.47 million just from the staking product. As you can see here, which will become more relevant later, the main variables here are Ethereum locked into the protocol, then the Ethereum price, and the staking rewards from the Ethereum main layer. Just keep that in mind for now. With the liquid product, we have a 1 to 2% take rate on the assets under management, or TVL. Let's have a look here at the Ethereum locked into the liquid product, and that shows actually really nice growth over the last couple of years. The main concerning thing I found here was that ETHFI is showing on their dashboard, on their Dune dashboard, all of their revenue broken down by its products. And when I isolate the liquid vault here and look at the revenue, then we can see here that this is weekly revenue that up until August, the revenue was actually 1 to 2% on the assets under management here. But after August, or in August, the revenue declined by 90%. I don't know if it's possible if they can get back to the old numbers of one or can get back to the old take rate of 1 to 2% on these assets under management. Remains to be seen. The annualized revenue since August is $800,000 per year for the liquid product. The cash product gives revenue on multiple fronts. If a client goes to a merchant, or an ETHFI spender goes to a merchant and spends with their card at the merchant gets charged a fee of 3%. 2% goes to Visa and 1% goes to ETHFI. Then ETHFI is charging the ETHFI spenders also a foreign exchange fee. And if users choose to spend on a borrowed capital, they will have a take rate on the borrowed capital, on the interest that the spender has to pay back to the protocol as well. All right, as you can see here, this is the fastest growing product of ETHFI by far. So on average, over the last couple of weeks, we had 1 million spending volume per day. And that also reflects in the revenue. As you can see here, this is actually growing exponentially. So people are really loving the card product of ETHFI. Right now, there are 30,000 cards live, and these 30,000 cards translate into an annualized revenue of $18 million. On the trade and swap product, we can only speculate a little bit on how much money they will earn. Just bear with me here. I made a couple of assumptions, and we'll see in how much revenue that would actually translate. So the way the trading and swapping product works is that ETHFI will integrate with a liquid staking product on Hyperliquid, to be specific. And if you have a certain number of hype staked into the Hyperliquid protocol, then you're getting a trading discount. The maximum trading discount is 40%. If ETHFI were to get to the 40% discount level, they would probably pass on 20% of the discount to their customers, and the other 20% they will redirect into the protocol as protocol fees. The trading fees, as you can see down here, maybe not so good, but I will tell you, 0.045% for spot trading and 0.015% for a leverage trade with perpetual futures. Now, clients over the ETHFI app will pay 0.012% only for a perpetual futures trade, so 0.003% less, and they will pay 0.036% for a spot trade, which is very competitive to actually centralized exchanges as well. ETHFI will earn then on the total volume of spot and perps volume. And I'll assume here that the spot to perps ratio will be 50-50. So people will roughly swap as much spot as they will use the perpetual futures exchange, because if you're getting a crypto card and it's a spending product, you're not thinking really about leverage trading in the first place. So then I'll assume $200 trading volume per user per day, which is actually quite high if you think about it, because over 30 days, that's $6,000 that will be swapped per user over the ETHFI app. Most people, I don't think, will spend even $6,000 over the card, but because of the perps trading and that is on leverage, let's assume that it will be $200 per day per user. I'll assume that ETHFI will reach its target of 100,000 active users per day until the end of the year, and 100,000 card users as well. And that would translate into a monthly volume of $600 million. And these $600 million will then result into an annualized revenue of $1.73 million for ETHFI. All right, as I showed the comparison earlier between ETHFI and its traditional finance or Web2 competitors, and ETHFI had a higher price to value ratio. Let's see if that is actually justified. We're going to make some growth assumptions here on ETHFI. So on the staking product, we are having right now 2.5 million Ethereum staked in total into ETHFI. The team target until the end of the year is to get to 3.7 million, but I personally assume it will only be 3 million Ethereum staked into the ETHFI staking product. I'll also assume that the average Ethereum price stays roughly at $4,500, which is really important, because if the ETH price were to go up significantly or down significantly, that would affect the revenue, of course, in dollar terms quite a bit. And then we have a take rate of 0.35% roughly. Ethereum staked into the liquid product at 215,000 Ethereum roughly. the team target is 500,000 Ethereum. I'll give them the 500,000 Ethereum. I don't know if they will reach the target, but in my opinion, it won't really matter if they can't capitalize on their product, as we have seen the revenue collapse by 90%. I don't assume that will change in the near future, just because if people want to earn really high yields on their Ethereum, they are also really sensitive when it comes to 1 to 2% more or less on these products, and they will just withdraw their liquidity from ETHFI if they're always getting a worse rate of 1 to 2%. Lastly, we have the cash product, and the cash product is not measured in TVL, but of course in cards ordered from users and the total transaction volume. And we are having right now, as we have seen, 30,000 card users and 1 million daily transaction volume. The team target until the end of the year is to get to 100,000 cards issued and 3 to 5 million roughly transaction volume per day spent over these cards. My personal target, I'll give them the 100,000 users. I don't think the next 70,000 users will translate into the same spending behavior as the first 30,000 users, because the first 30,000 users are mostly the power users of the product. My target is 2.5 million spent per day, which is still a 2.5x from here, and a take rate of 1%. So let's look at the numbers right now, what that will do to the revenue. All right, for the staking product, we have an annualized revenue right now of 43.47 million. And I assume that the ETHFI team will achieve my targets and not their set targets. So all of these numbers are based on my assumptions, just to preface that. So the end of year revenue target for the staking product would be then 47.25 million with a growth of 8.7%. Then the liquid product brings in 800K a year now. Right now, the target would be also 800K per year. I don't think, like I said, the product is growing significantly, and the growth will be stagnant here. Then with the cash product brings in 18 million right now, and the target would be 45 million. And that would be an increase in revenue of 250%. So that's the most significant increase here. Then the trading product is bringing in $0 right now because it's not live yet. I'll assume an annualized revenue of $1.73 million a year until the end of the year, which would be a nice income stream as well. And then we have, if we add all this up to a total, right now ETHFI is making roughly 62.72 million in annualized revenue. It could be a little bit more. I didn't include the withdrawal fees, because if you withdraw from their products, they're taking a fee as well. But since that is not sustainable business model, I didn't include the revenue here. The target would be $94.78 million until the end of the year, which would be a growth rate of 52.2% in just 2.5 months. So that's a huge increase and assumes a really, really high growth rate. If they were to reach all these targets, these $94.78 million of annualized revenue until the end of the year, that would translate into the price to revenue ratio of 13.27, which is still higher than its fintech competitors. Let's change gears here real quick and talk about the tokenomics. Nothing special to see here. Core contributors, which includes team members and people who help them build, like strategic partners who help them build the protocol. That's roughly 23.3%. Then the treasury is another 27.24%. The user airdrop was 11%, so that's a little bit more actually than most protocols give to their users. The investors are 32.5%, and they saved also 6% for partnerships. I would say that's a fairly normal token distribution. The token unlocks. So we have roughly here today a 516 million circulating supply of the ETHFI token. Until the end of the year, which I marked here, the token supply will be 604.8 million. And then the rest of the tokens will vest until April 2027. The total token supply, which I didn't mention here, is 1 billion token. This increase from 516 million to supply to 604.8 million will be an increase of 17.1%. So that's quite a huge chunk of token unlock right now. And we have to keep that in mind as well when we're talking about if we want to invest into the ETHFI token or not. The token utility makes me happy. There's no equity entity involved here, which means all earnings will benefit token holders. And right now, 15% of all revenue is already flowing back to token holders, which means ETHFI stakers are getting a yield on their staked ETHFI. Let's have a look here. So they will show, ETHFI is showing very transparently here the weekly buybacks of the token and have also a total dollar value, how much has been bought back from the market yet, and that's roughly $7.5 million. And you can see it here broken down by week. And if you look into the app, the estimated APY on ETHFI staking is 10%. So if you buy ETHFI, stake them into the ETHFI protocol, and the protocol will buy back ETHFI from the open market and redistribute it to you and the other token holders. Now we have to talk about the risks a little bit. What could go wrong here? So first of all, what I thought was concerning, and I didn't get a real answer to, is like the liquid product collapsed in revenue. We talked about this before. It was at 8 million annualized revenue before, and it got down to 800,000. Then a huge incentive mechanism for getting the card are actually cashbacks for users at the moment. So ETHFI users, ETHFI card users, are getting 2 to 3% cashback at the moment, and these cashbacks are in USDC and subsidized by the Scroll team. And at current spendings, which is like $1 million a day gets spent over the card, which means $30 million a month, 2 to 3%, that would be $600,000 a month that Scroll has to pay the ETHFI card spenders. And when the volume were to increase to 2.5x, that would mean the subsidies would go up to $1.5 million in cashbacks a day that the Scroll team would have to pay the ETHFI users. And that is not sustainable because the market cap of Scroll is at the moment $36 million. Even if they had a huge treasury, they would run out real quick out of money. Then the next uncertain thing is how well will the trading product do. And in my opinion, I already chose a pretty optimistic scenario here, where with $200 per user traded per day, I think that could be also substantially lower, because if you download the ETHFI app, the main pain point you have is probably that you want to spend money over the card and you are not thinking about trading in the first place. Then I put here how to attract regular users. I should have said how to attract Web2 users, because the crypto market has its limits, and right now the ETHFI product is only growing within the crypto space, which is totally fine for the moment. But eventually, if ETHFI wants to reach these high market caps that Nubank and all these other competitors have, they have to expand somewhat beyond crypto. And what is really the reason for a traditional fintech user to go over to ETHFI and spend their money over ETHFI? And I don't really see a reason here, because Revolut, Robinhood, and Wise, they're already exploring these crypto products as well. I've seen a function where you can already spend your crypto over the Revolut app, and then there would only be missing a good savings product, which these fintechs app could easily integrate via Morpho, for example. And then the hurdle would be really high to switch to the ETHFI app, because if saving rates are competitive, the leverage trading and self-custody argument, I don't think is really compelling to traditional fintech users. So that could be a problem for ETHFI to expand beyond crypto. 70.1% increase of circulating supply by the ETHFI token, and also the parties that get unlocked are the early investors and the team members. So if we assume that the team and the early investors are going to sell their tokens at an average dollar price of ETHFI $2, then that would result in a potential sell pressure of $176 million. And yeah, you could say, okay, but also the ETHFI protocol is buying back tokens. Yeah, but even in the most optimistic scenario, which I lined out, when the protocol is earning almost $100 million in revenue by the end of the year, that would only result during this time period a 2.5 million buyback from the open market, and that against $176.9 million of sell pressure. Yeah, not great for price action, I would say. Then I have a long-term concern as well. If crypto were to get more and more mainstream, merchants could also think about accepting crypto payments directly, and that wouldn't be too big of a hurdle. In supermarkets, you just could put in QR code right next to the cashier, who is offering a 2% discount if you pay with crypto directly, which would eliminate these middlemen like Visa and ETHFI. Lastly, and that is actually one of the most important things to me, is the ETHFI token is heavily dependent on the Ethereum price. So let's come to a conclusion here. Will I buy the ETHFI token right now? And my answer is no, I won't buy the ETHFI token right now. The token unlocks are just too much for me. 17.1% of circulating supply right now are getting unlocked. Then we have the Ethereum dependency, which I mentioned before. And with the Ethereum dependency, I mean, if we were to run into a bear market in 2026, which would be the base case scenario if you think the 4-year cycle is still intact, then ETHFI would have less staking revenue, because even if there were more Ethereum staked, the ETH price in dollar terms would decline heavily, and that would result in less dollar revenue from the staking revenue. Same goes for the liquid product. Then spenders will feel less rich because we're in a crypto bear market, so they will most likely spend less money over the card, which means less revenue for ETHFI. Also, people are trading way less in a bear market than in the bull market. And all of these factors make ETHFI a very risky investment in the current environment for me. I could also be wrong in the sense that they have a really, really good and competent founder. He already created a company and scaled this company to 60 million annualized revenue. His name is Mike. I'm not there to pronounce his last name right now, but you can look him up. He's really competent, and he's really savvy when it comes to creating these products on how to make money and how to make it a win for everybody. So not buying short term because of the huge token unlocks, but long term, it could still be a good investment in my opinion. I could vastly underestimate the traction of the trading product. I mean, Hyperliquid has huge volumes right now. And if in theory, if 1% of Hyperliquid volume would come over to the ETHFI app, that would be a revenue explosion for ETHFI. And that's not my base case scenario, but that's certainly one point where I could be wrong. then we could have no bear market in 2026. Many people are actually saying right now that we are not going to have a bear market, and there are good reasons for it. If the Ethereum price would stay high, then of course the ETHFI would sustain these high numbers of revenue and could even grow further. And of course, the liquid product could start making substantial revenue again, and that could propel the revenue to higher numbers and therefore the ETHFI price to a higher value for sure. Yeah, and that's it with my presentation. Let me know in the comments, what do you think about the ETHFI token? Is it worth an investment right now? Did I miss anything in the presentation? If you have an idea which token I should analyze next, let me know in the comments also. And other than that, see you in the next video. Bye bye.